Hi everyone, I'm Ken from CryptoTradingKS. If you're new, welcome, and welcome back KS family. Let's run the numbers. Bitcoin currently up 3.31% to 42,633. Ethereum up 2.94% to 3,005. The best way to avoid scammers is go into the description of this video. You'll see all the different links that I have there. If you're going through a life pullback at the moment, please know that our community's love and healing thoughts are with you. There's always hope. The sun will come out again, and you are not alone. Let's have a look at Bitcoin, currently trading at 42,524. We've seen that it's actually been able to hold a degree of support. It's over this previous resistance. This is really positive stuff. However, it is coming into a confluence of resistance around the $45,000 mark. We may get an upwards liquidation of shorts, but for that to happen, they need to be in the market. And we can see some of the shorts are coming back into the market, but I don't believe we have too many. What may happen is that we may get up to this $45,000 mark and then just wobble around. Remember, price is always moving in a wave, and prices are negatively biased. That's because a lot of fear exists inside financial markets, and people are very, very likely to sell down their positions. When we overlay the NASDAQ 100, the main stock market, we can see that there's a lot of directional correlation right now. The health of the main markets is also a really big determining factor as to what Bitcoin does. That's why we must look at them. A lot of people don't look at them, and they disadvantage themselves greatly by not doing so. Crypto technical analysts are always stacking probabilities. They understand that the market is multi-dimensional. It's not a light switch. It's not simply, I'll go in, all in and more, or I'll go all out and more, just like light switching. That is not the way the professionals deal with the market. Instead, they stack probabilities. Let's have a look at the number of longs. What we're actually seeing here is that we're getting over a level of resistance starting to turn around and starting to go. We've seen that 1, 2, 3, 4 times. What happened on those 4 occasions, or the previous 3, to try and give us some understanding what could happen now? When we're over resistance the last time, we went up, and what we can see is that it was a pretty choppy maneuver. We had big spikes followed by big retracements, followed by big spikes, big retracement, big spike, big retracement, big spike, big. Please bear this in mind. This is crypto's exponential nature, and of course this is Bitcoin. We know that the directional movement of Bitcoin will be reflected by 99% of the alts. What happened in this position? The second time we crossed resistance, we had a big rally up, which led to some upward price momentum. What happened then? We had a downward trajectory in price, but the longs kept on accumulating. What about this last time, the third time? We had a bit of up and down price movement, but mainly negative, until we had this big capitulation move to the upside. What it actually means is that you need to always be aware of what you will do if price goes up, goes down, or goes sideways. This is what we do as professionals. A lot of people like to talk about the relationship between Bitcoin and the DXY, the US dollar currency index. When we look at this, it almost looks like it's an inverse relationship. So let's flip it around and let's see if that's actually correct. What I've just done for you is just inverse this relationship, and there appears to be a lag, but there appears to be correlation. Now, what is actually happening at the moment? When we look at the current price action of the DXY, it came down. What did Bitcoin do? It came up. It's coming up. The DXY is now coming up. What is Bitcoin doing? It's coming down a little. But what has it done on previous past occasions? Has the correlation been fairly tight? And you can see it is lagged to a degree, but it is reasonably tight. One of the things that we do is, as crypto technical analysts, is we stack probabilities. I do deep dives on all of these relationships inside the masterclass, but what we're actually looking at here is stacking probabilities. We can't just use one thing and light switch in or light switch out. We don't work that way as professionals. What we must do is to accumulate as many for or against probabilities as we can. I generally start off by looking at the main stock market, but I just want to show you how important it is to actually look at that. Looking at Bitcoin options and looking at the Maxpain price can also be another potential stacking of probabilities. The Maxpain price is the price at which the majority of options expire worthless, and this has a theoretical underpinning. The Maxpain theory basically says that on an expiration date, price will gravitate towards the Maxpain price. For example, we're looking at today, March 23rd, Maxpain price 42,000. We used to look at how price actually reflected the Maxpain price in past episodes, and we're going to start doing that again because it was really interesting to do it in the past. But a very beloved community member said, "Ken, can you do it?" And of course, the answer is yes, I'll do it. We can see here for March 24th, it's 43,000. And going to the next day, March 25th, Maxpain is 41,000. Going to April 1st, 40,000. April 8th, 42,000. April the 29th, 40,000. Please note that the options expiring at the end of the month are actually the ones that you want to look for. They have the greatest volume. We can see Maxpain for May 27th is 40,000, but we're getting some calls up towards the 100,000. Let's have a look at June 24. We've got calls all the way up to 300,000, but the Maxpain price is 40,000. You can see how the Maxpain price will change dramatically over time. It's also really fascinating that I drew in this Maxpain price about 12 hours ago, and it's already changed. What we're looking at here is from the 22nd to the 25th. The Maxpain price is 42, but you can see it's already changed. Now, on the actual 24th, it's gone up. You can see that it's actually shot up. It used to be down at this 42. It's now gone up to 43. And this is what happens with Maxpain. Maxpain just moves all over the place to reflect what's happening inside the price. But we'll track it because it's really, really interesting. I'll have to adjust these lines. Just one sec. I've just increased this visibility and just zoomed in a little bit. Hopefully this will help out. You can see that the Maxpain price was not 43, it was down here at 42, but it just suddenly bumped up. This is what is the problem with actual Maxpain theory. Maxpain is not a static number, it moves around, but we can keep on tracking it. You can see here that I've drawn out the Maxpain levels. What we're looking at in the next couple of days, 42. What about after that, 43, dropping to 41, dropping to 40. Remember that these Maxpain levels are dynamic. You saw this one just jump up $1,000 literally in the past half a day. Just bear this in mind. These things are always wobbling around. They are not static, and they actually react to the current price. We can use Maxpain theory as a bit of a way to stack a different probability. Over time, is the Maxpain going down or coming up? Another way crypto technical analysts actually stack probabilities is to understand the stablecoin market capitalization. When stablecoins actually increase in terms of market cap, that is predominantly reflecting that the market is going up. And there seems to be a very close association with the overall market capitalization or market direction or movement of Bitcoin and USDT's market capitalization. What are we seeing here now with USDT? Masterclass students, you get this in TM14, this my live chart. What we can see is we're getting an upward progression. What do we see on the second largest stablecoin, USDC? It had a bit of a lull and now it's starting to go again. What about BUSD? That is decreasing. And what about the stablecoin DAI? That is increasing. What crypto technical analysts do is they do much more than just look at one chart. They are scientifically tracking investor attention, collecting probabilities, and understanding how the markets work. They are professionals with a scientific methodology that they practice and follow. It's also good to keep your eye on DeFi Llama and look at the DeFi network. We can actually see total value locked, or the TVL, is starting to increase. This is a stack probability again. This is something that tells us that the market is starting to turn around. There's more and more confidence here as people are locking up more and more money. This is really good sign. This is another stack probability. But please note, sometimes DeFi Llama has very dodgy values. Sometimes it just doesn't work. If we go across to NFTs, data is currently incorrect. And you can see it's incorrect. It's just absolutely not true. So they say, please don't use it. At least they acknowledge it. Well done, DeFi Llama. Crypto technical analysts are profitable because they have a lot of rules and they know how to think professionally. Rule 114, markets penalize certainty. With KS zone analysis, the 4 stages that all investors and traders progress through to become consistently profitable and attain real wealth, people who are addicted to certainty enter the crypto market in zone 1, the panic zone, and zone 2, the blame zone. Unfortunately, those kind of behaviors create self-sabotage because they're based on fear, and fearlessness is required. When we get into zone 3, these are the rules to make money. Zone 4, the rules to keep money. We discuss this all inside the CryptoTradingKS Masterclass. But the key thing here is when you are after certainty, when you absolutely positively must know to light switch all in or all out, to buy on green, sell on red, being addicted to the news, or thinking an indicator will give you a solution. Indicators throw off many conflicting signals. They are to be used with caution. Understanding Rule 114 can get people out of Zone 1 and Zone 2 into Zone 3. Anytime you feel yourself reaching for certainty, say to yourself, this is not Zone 3 behavior. We'll quickly go through the main markets as I've basically done it already on an overlay of the Bitcoin chart. But just please remember that cryptocurrency is under $2 trillion in global market capitalization. It's really tiny. It's starting to adopt and starting to take off inside its adoption curve. We're really early. We certainly haven't missed the boat by any stretch. There's decades of gains to be made in crypto. But understand, crypto is at the mercy of the stock market and the bond market. You can see the stocks globally around 120 trillion, bonds above 120 trillion. Crypto is really tiny. You know, because of the work we did earlier on, that things like gold, the DXY, bond prices, bond yields, oil, the NASDAQ, which measures economic confidence, and the VIX, the fear. All of these charts influence crypto, and it's really important to do those associations. What do we see here? And Masterclass students, you'll get this live chart in TM6. We saw the VIX, the fear gauge of the market, break below a resistance level, and it stayed there. This is really good. What is this witnessed by? This is witnessed by an increase in economic confidence. Just remember, we're coming up to a level of resistance, and price is always moving in a wave. It's going up and going down. So just bear that one in mind. When we look at economic concern through bond prices, we can see bond prices just collapsing at the moment. The inverse of bond prices is bond yields. Those yields are spiking up. We saw gold, the gold futures, collapse from that point. And I was warning a lot of people around here before we got that spike up, be really careful, because these spikes are unsustainable, and we've come back to a level of support, and we're just consolidating at that level of support now. I believe the long-term prospect for gold is really, really good. It's coming out of a very long consolidation base. And when we look at the DXY, remember we overlaid the Dixie or the DXY on Bitcoin for the inverse perspective. It's coming up to a lot of resistance. It's very overextended. It has a lot of support down through here, down through this 96,522 mark. It could very well come back here, just as we saw with gold. I was saying, for example, with gold, we would expect it to come back when it was looking like that. And a lot of people said, Ken, it's going parabolic, it's going to 3,500. And I said, after 30 years being in the markets, it's not. It's going to move in a wave. And we saw a very similar thing with oil. Oil was going parabolic, and I was just saying to people, be careful, and I drew in this 25% reduction. Oil just went down a little bit further than that, and I said it's coming into a technical support level. We would expect a technical bounce. So what happens is, typically, just look at this as any type of crypto chart. What you always want to do is to enhance your pattern recognition. When you look at something like this, you see a big exponential increase, which becomes unsustainable. It will be corrected down to a more normalized level. And this is what crypto technical analysts learn. They learn all about how the market actually works, not how the media and press says that it works, because the media and press sell fear. I've had numerous contacts, direct messages on Twitter, people reaching out to me and saying, can you save me? I was going to go all in and more when oil went parabolic, but I took some profit and saw it turning against me and took some more. And then when I said it was coming into support, they started adding to their positions. They've done quite well. But please remember, we're also coming in with oil to a level of resistance around this 115 mark. We may get a movement down. It really depends on so many things. Economic conditions in relationship to oil are very uncertain at the moment. But we know certainty is not rewarded by the market. It's punished. Uncertainty is the thing that's rewarded by the market. All of these issues bear out on crypto's price, and Bitcoin rules the crypto market. As Bitcoin moves, so too does your beloved alt. A lot of people are addicted to the news, but we're not. We actually look behind the news and we see what's happening. The charts will tell you the news. The news is very, very misleading. When we look at the Fed balance sheet, it's actually increasing. You can see that purple line here going up. When we look at the money stock, M1 and M2, both are increasing as well. The CPI is increasing. The 10-year and 5-year break-even inflation rates are both increasing as well. This is something to bear in mind. We're seeing more and more inflationary pressure inside the US economy. We can also see that the Nasdaq has overcome a level of resistance, and we would anticipate price moving in a wave to come down here, consolidate and push its way up. It could come up a little bit further with the Nasdaq into this level of resistance, but be aware, we would expect a wave down. Masterclass students, you get this live chart in TM4. Sometimes it's really important to zoom out and see what the pressure is on crypto to either go up or go down. So we compare Bitcoin to the inverse of bond prices. We can see a lot of momentum to the upside. We would expect this to pull up Bitcoin's gravity. And when you know how big bonds are, it really makes a lot of sense. In Zone 3, people understand Rule 570. Psychology sets profitability. In fact, this is the very thing that I look for. When people say, I want a guaranteed return of X%, I know immediately that's Zone 1 and Zone 2 thinking. That is not the market. The markets are not here to give us any X% return. We are here to increase our knowledge and move with the market. Inside our community, we always talk about maintaining a positive excellence life trend through real wealth. And the reasoning and logic for this is that having integrity, decency, kindness, inner and outer peace, all of these things actually undermine self-sabotage and self-doubt. Self-sabotage and self-doubt are your two greatest enemies, and they keep people locked in Zone 1 and Zone 2. A positive excellence life trend gets people out of Zone 1 and Zone 2 into Zone 4. Another critical rule for Zone 3 is Rule 45. No alt can escape Bitcoin's gravity. What happens when people get into the crypto market? They only want to look at their particular alt. They certainly don't care about Bitcoin. And the stock market? What's that? They don't even like it. And when you think about it, I can understand why people think that way. But after so many decades inside financial markets, if you don't understand how the overall market is moving, you will get smashed and you will not know why. What we need to do is to understand how all the gravity of all the different financial markets is impacting Bitcoin, and that directional movement of Bitcoin up and down will be reflected on your alt. To give you a comprehension of how Bitcoin's gravity actually plays out, when you see this blue line, that is Bitcoin's price action. This is Ethereum. Notice how Bitcoin's price action is actually playing out on Ethereum and Binance Coin and XRP and also ADA, Cardano, Solana is also playing out. We can see a little bit of a difference here with AVAX, but still the directional movement, the percentage either up or down, is getting over or under exaggerated in the alts, but they all move together. So many episodes I've shown you this, how Bitcoin's gravity will impact all alts. Even though Luna looks completely separate to Bitcoin, it is not. And you can see it here. When Bitcoin rose up, Luna was rising up. Bitcoin comes down, Luna comes down. Bitcoin comes up, Luna comes up, and then we've got an over-exaggeration in particular price movements. Understanding Bitcoin's gravity is the first rule of Zone 3. Let's have a look at Sum 8 that I was talking about in yesterday's video. We can see Sand still under resistance, Gala under resistance, and I said just pick out one. And let's talk about that. And I actually did a participation trade in that particular alt. Phantom, we can see under resistance, and actually on the other side of resistance, now under support. And we can get a fairly reasonable support line here in FTM. That's looking good. EGLD has broken its resistance line and rallied up strongly. That's a good thing, but it may well come back and test this. Don't forget, price moves in a wave, and we've seen that the Nasdaq is overextended. Too much fear has come out into the market. We're going to get profit taking. Arweave has crossed this resistance level, turned it to support, and you can see Bitcoin's gravity impacting all of these alts in the background. And DOT, what's DOT doing? Oh, DOT's got a high. This is the one I picked. Okay, so I did a participation trade at 1868. We're now 2042. So I put the money into DOT less than a day ago, and it's already returned over 9%. We talk about actually getting into different trades and getting 10% on average a week. It's more than possible. A lot of people, when they hear that, if they're in Zone 1 and Zone 2, they say, Ken, 10%? I'm going for 1,000%. Oh, Ken, you're a loser. 10% is nothing. Actually, it's really interesting to see how a 10% on average return works out for a week across a year. And of course, you need a lot of knowledge, a lot of rules, patience, the right psychological focus, and you must buy on red as well to do this. But if you took 1,000 and just could take a 10% return each week, so what we've done, March 6th here, March 12th here, 1,000 becomes 1,100. that is a $100 return, which is 10%. But annualized, it's 11,639%. And this is really important to realize. It's not about going for these large percentages. You don't need them. But the concept is you can start with a little, and if you just keep turning your money over, and of course you pay tax, but that's good. That means you're actually winning. And then when we look at this, $1,000 increasing by that amount, if you could do 10% per week, comes up to $117,390. And you can see this 11,639 here, 11,639 here. So we've got confirmation between all of these things. This is not about chasing a big percentage. It's about understanding how Zone 3 think. They understand percentages, and when they look at a percentage, they say, okay, if it starts at 10, comes down to 5, that's a 50% return, but it's a 100% return from 5 to 10 to come back. They use volatility as their best friend, but they also use these small incremental percentages to actually build their wealth. I talk about all this in the CryptoTradingKS Masterclass. Now, why did I pick DOT? Why didn't I pick Arweave or Phantom or something else, Gala or EGLD? It's because of risk to return, and it's also because of safety. The first thing that you always want to look at is how safe am I to put the money in here. You can see there's a lot of consolidation in terms of support below this current price. And that consolidation acts as a ledge or a fence to actually restrain the price. What about EGLD? Why wasn't that the high? Because it was coming into resistance at that particular time. The probability was that it could hit resistance and actually go down. We didn't want that. What about Gala? Gala is certainly in a nice pattern, and I'm always participating in different trades. But Gala wasn't the one. It wasn't quite as good as DOT, and I've been pointing out DOT and ADA for some time, as well as XRP. I always drop hints to you in every single video. Long-time viewers know that I've spoken extensively about ADA, and many people were talking about ADA and saying, oh, ADA's just going to collapse. And I said, no, I don't think so. I think the technicals are showing us that we're going to get a turnaround here. Remember, price is always moving in a wave, so ADA can go up and come down. Even if it comes down to a support level, it's just resting after a big move up. But I think there's more to ADA's move, especially if Bitcoin moves. And that's why we must know what Bitcoin is doing. Bitcoin's gravity plays out on the entire alt space. And XRP has been doing really well, but we pointed out XRP quite a while ago. In yesterday's episode, I introduced you to the Investidor. Hasta la vista, baby. It's all about combining the strengths of an investor and a trader to become an Investidor. And it's really all about the process, the investor's journey. When people get into the market, they define themselves as investors because they don't know when to buy or sell, so they just hodl. But it's a lot of stress, and they listen to the news all the time. The news spreads fear, uncertainty, and doubt, and fear of missing out. In other words, the news spreads fear. Because people want a sense of certainty, they buy on green, and they tend to go all in or all out. All in on FOMO, all out on FUD. They're always seeking to buy the bottom and to sell the top. Professionals don't do any of these things. We're independent of the news. We actually buy red. We never go all in or all out, and we don't even care about bottoms or tops. This is something important to understand. When people are investors, they're putting up with all this stress. They want 1,000% plus returns. Absolutely. They want to get so much more for their money, but they're not quite sure where to put that money. And then, therefore, they can put money into a particular project, and that project doesn't do as promised. Price is reality. Promises are just promises. And of course they get angry and they enter zone 2, and they can fluctuate between zone 1 and zone 2 until they basically said, I've had enough of this, I need to increase my knowledge. But the problem is many investors don't want to pay tax, so that they say, well, I just need to pick better investments. They do over time become aware of trading, because all investors become traders anytime they buy or sell. Professional investors and professional traders have a completely different mindset to retail. Professionals are all about borsog. What's borsog? Borsog is buy on red, sell on green. It's a very different mentality to retail. They're all about volatility and making volatility their best friend. They understand percentages, how small percentages create big gains over a year, and how you can start at 10, go down to 5, lose 50%, but from 5 back to 10 is just a recovery of price, but it's 100% movement. They understand timing the market. They're in before other people are even aware of what's going on, because they monitor the market. They're independent of the news, and they use the CTKS method for marking up their charts. They don't get the stress. They can sleep really well at night because they make three-way decisions. They know what they're going to do if price goes up, down, or sideways. They understand the 10-5-10 rule. They've got a volatility fund. They know that 10% per week adds up to a really large percent per year, better than the return that they would get from actually investing. But there's no reason that you have to become a trader or an investor. Become both. Both have advantages. We don't light switch into anything. We're professionals. We take the best of what is presented to us. And we understand we have a real wealth perspective. And we understand that tax is success and its contribution. Roads don't get built. Schools don't get built without taxes being paid. Taxes are a critical part of our contribution into the world. Of course, we minimize tax, but we understand positive excellence. You don't get anything without giving first. And positive excellence is all about breaking the poverty mindset that exists in Zone 1 and Zone 2 and moving to an abundance mindset. One of the masterclass students actually shared with me a trade that they had made. They had $498, so $500. They split that across 2 particular levels and had patience to wait for that to be actually filled. And then they had the knowledge of where to sell. What happened is this particular student, within 8 days, got a 12.31% return. Don't forget, this is 12.31% over 8 days, not 12% over a year. And bank interest is nowhere near 12% at the moment. This annualized return would be 33,121.7% if this particular student kept on doing this. We don't worry about the really big percentage. What we actually do is we say, okay, you can actually turn over trades, and that will accumulate towards a really good result. And many people get stuck in that particular taxation section where people try to not pay tax, or they say, I'm an investor, I can pay less tax because I'm just going to hold on for a really long time. The concept is you're in the market to make a return, and if you can make a greater return in the same period of time, you can be more of a financial blessing to yourself and those you love. And that's the real focus, is on being a financial blessing. I have specific taxation software that I found is the absolute best piece of software, and I've tried them all. It's in the link in the description. A lot of people say, I don't have the time to be a trader. Absolutely you do. Everybody does if the focus is there. But the concept is you can just leave your buy orders in the market and just walk away. You really want to focus on only 3 or 4 different cryptos. You don't want to focus on so many. The more you focus on, the less focus you'll actually have. Focusing on just one is fine. I hope you found the content useful. please consider sharing and liking this video and subscribing to the channel. Thank you very much to our moderators for keeping our community safe from scammers, and to the CTKS ambassadors for mentoring masterclass students. And of course, a very big thank you to you for watching and being part of our global KS family. If you would like daily updates on price movements in the crypto market, 7 days a week, 365 days a year, please subscribe to YouTube. One thing, when you look at a percentage like this, don't go near it. Zone 1 and Zone 2 people would be going crazy over this. Zone 3 and Zone 4, they're running for the hills. I've left helpful links in the description of this video, such as the CryptoTradingKS Masterclass. Please seek out an ambassador to get 80% off. If you would like to share your charts, the result of your trades, please directly message me on Twitter, or you can reach out by email as well. I'll always keep your name confidential. Please remember, crypto is volatile. Always prepare yourself for the best and worst case scenarios. Reality will likely be between them. Stay safe out there, my friends. Take care and see you next time. Bye for now.